Yeah, I talked to my partner Putin over here about what happened with silver, and actually somebody sent me a link, which was a private link from some investment company, I guess it was, but it was also on Zero Hedge that they had this link too, but it does explain a lot why the hell all the commodities would jump down greatly during April and before that. It has a lot to do with the policy of the Bank of Japan. You know, everybody's looking at J.P. Morgan. You know, if J.P. Morgan was the problem, it would be kind of easy to fix, but it's not the whole problem. It's part of the problem, or whatever they're doing in the CME, in the futures market. Yeah, it's part of the problem is electronic trade. But here's the other thing. Because electronic trade, I mean, it can go either way. I mean, you can make a lot of money on the way up. You can make a lot of money on the way down. But what are they doing, really? What's going? Why have all of a sudden the commodities become so unattractive in the face of lots more QE? Well, what happened is this. Basically, there was a lot of talk about the Liberal Democratic Party in Japan being elected. And, you know, they did become elected. And then there was a lot of talk that they were going to embark on a lot of QE as policy, governmental policy. And you're thinking, well, that's good for gold, but not necessarily in the short term. What it has caused is this, and I found this interesting, because I'm a person that's in accounting that doesn't necessarily see all this macroeconomical things, but now that I'm looking at them, it's very interesting. The fact that Japan has almost zero interest rates, and it's even lower than the United States interest rates, the fact that they embarked on QE and they're making money easily available to borrow has caused investors to borrow in yen at zero interest rates, and then invest that money somewhere else that will give them returns. They're not going to just buy gold, paper gold. They will borrow money in yen and then reinvest that money somewhere else to give them higher returns, and also leveraged. So in other words, if someplace else is giving them 4% return and it's leveraged 10 times, they're getting 40% return, and they borrowed the money at almost zero. Guess what? That's what they're doing. They're not. That's why gold and silver and things like that are not that attractive. But basically, this whole scenario with Japan embarking on this type of QE that's in record territory is very dangerous. Now, George Soros has remarked on this, and, you know, he says it's very dangerous. This guy is not, you know, he's 50-50. He's like bad and good. He's actually telling you the truth on that big time. And it's going to actually lead to a major problem in Japan. And their bond market is about as big as the U.S. bond market, Japan's bond market, except a larger percentage of it is actually held domestically. Also, 30% of their governmental budget is just interest, paying interest only on the debt. Only interest. And that interest is actually below the U.S. interest. It's like really close to zero, okay? So if their interest goes up even a slight amount on the Japanese bonds, and actually this is going to be bad for their bond market eventually, if their interest goes up even very little bit, it's going to take up 100% of the governmental budget. And what actually this policy is going to lead to is rampant inflation in Japan. Now, a lot of people are buying physical gold for that reason. Now, a lot of people also ask, well, when is the end going to come? I'm going to tell you one thing. I think Jim Rogers might be throwing everybody a curveball about saying gold is going to be good for the next 10 years. I doubt if it's going to be that long. It's going to actually things are probably going to heat up, and things are probably going to fall apart economically in a major way, where there's going to be, government's not going to be able to pay all the programs and stuff, and, you know, that type of stuff within the Obama administration. And, you know, the writing's on the wall. Actually, you could see that with the Homeland Security and all that kind of garbage, and then buying all that ammunition and stuff. They expect it. And it's probably not going to be 6 months from now, but it's going to be within the Obama administration. I think he's going to be the fall guy. He's not a popular guy with me, but he's going to be the fall guy. Obviously, no president runs the whole country. You know, it's a lot of different things going on. Then there's a lot of people setting policy, not just one individual. But he will be the guy in office when things actually fall apart. So with Japan, having this super QE going on in uncharted territory, something George Soros said thinks it's going to be very bad in the long run. It is going to be. And actually, in the short run, it's actually done very good for Japan in the very short term, because this Nikkei, the stock market in Japan, has went up 50% in 6 months. And the last time it did some kind of stellar curve like that, I don't know, maybe it was in the 1950s or something, and they had 10% inflation afterwards. And that's what's going to happen. Actually, they're going to have extreme inflation due to these policies eventually. And longer range, they have a lot of people in Japan that are retiring. And even though they have a large bond market and stuff, it's all being held domestically. And when they retire, they're going to be looking for this money, and it's not going to be there. Basically, actually they're going to have a major problem in their bond market by Japan embarking on this extreme 1.5 trillion yen QE policy. So that is actually why the commodities became very unattractive to all the paper traders, or you want to call them that. You know, the big bucks. They know how to leverage up investments and that type of stuff. In other words, they borrow in yen, because now yen has become available because of extreme QE, and then they reinvest that money someplace else that gives them a return. Like yen, it's not costing them it's not costing them really anything to borrow. The interest rates are even below the U.S. interest rates, which U.S. rates are almost at zero. It doesn't cost them anything to borrow. Then they reinvest that money into other areas. It could be other bonds in other countries that are providing some kind of rate of return, and then they leverage that up. So they got a surefire bet. So therefore, just holding gold is no longer a smart thing to do on paper. But quite obviously, what people are doing as far as buying physical gold, lots of people are doing that. Now go back to the words of Mark Farber. Why does he have physical gold? He's afraid of a systemic, catastrophic, worldwide collapse of the financial system. Maybe that'll happen. And, you know, there probably will be a panic into gold because, you know, all these other freaking financial shenanigans that are going on. You know, somehow people just making money for nothing is not the way to go. You know, it's not going to happen with everybody. And there's too many people in the financial world making too many gobs of money doing, basically playing cards, you know. Basically being at the casino table and actually knowing some inside information as to how, you know, some of the financial instruments work. So if you could borrow money in yen, you borrow as much as possible at 0%, and then you go buy yourself something that provides a return, and you leverage that up, and you got a surefire bet. The average person can't do that. The average person's just going to buy silver. But, you know, hang on. I know there's the outside scenarios that can happen with war in the Middle East. I know Israel had a strike on Syria. That is not a war in the Middle East. If there's like, you know, they had a rumor last year, and it wasn't even a real thing that happened, but it was a rumor that a Saudi pipeline blew up. One pipeline, due to a sabotage attack by some, you know, elements in Saudi that were against the government. And it didn't even happen, but it was just a rumor. The price of oil spiked like, you know, $6 inside of like, you know, half a day. Now, what I say is, when they have a real war in the Middle East, and say it's Iran, or say Israel does strike Iran, or whatever happens, you're going to see oil and gold fly up. I don't give a damn what happens with the yen's QE policy or whatever. Oil and gold are going to fly right through the roof, and then silver is going to take off. That's a wild card. That's a wild card. That's something else. But even without that, this policy that Japan is embarking upon with almost unlimited QE, with 1.5 trillion yen in QE, is going to end very badly. And George Soros, he's only temporary. You know what? George Soros got out of gold. He got a GLD. He probably has physical gold. You probably don't know what he has. But basically, he's a gold bug too. You're not stupid. He's not stupid. A lot of people are buying physical gold for this reason, because when actually all this garbage does unravel, you know, somebody's making a lot of money by borrowing yen and, you know, and reinvesting it somewhere else. But, you know, at one point in time, I think Mark Farber's word is about a systemic worldwide collapse problem in the financial system probably is going to like snowball an avalanche, because too many people are making too much money just by, playing card games and computer games. There's something wrong with that situation. I always look at, who made the building, who made the roads, who put the electricity in, who grew the crops, who got the lumber, who made the lumber, that type of stuff. There is less and less of those type of people around. There's a lot of people that are the wealthiest, that upper 1 basis point pretty much aren't those type of people. George Soros got his 20 billion from being investing in the currency markets. But when he's talking about Japan having a problem due to this policy, he's telling you the absolute truth. And that is why you're going to stick with gold and silver. It's not going to be a years-long wait. I know it's going to seem like a long time, because I don't really feel too good about silver and gold going into the summer. It may not be so hot. It may be that things really heat up more towards the end of the year and then into 2014 and actually break new records. Now, Lindsey Williams talks about things falling apart during the Obama administration. Could be right. I think that's really what it is. It's going to happen during the Obama administration. He talks about $75 silver and $3,000 gold, but that's a 40-to-1 ratio. I think if silver really heats up, it's going to get down to like a 20-to-1 ratio, maybe 150. But, on the other side of it, you're going to see, like, when things start heating up, a lot of people are going to be coming out here demanding at least that it'll go at least $500 an ounce, $1,000 an ounce, $2,000 an ounce. And I'm like, no way. Even if it went to 75, that's a triple from here. That's a hell of a lot. So, it's just going to be one extreme versus the other. But I am definitely not in the camp that silver and gold are going to stay down for years. No way. No way. No way. Actually, we might have seen the bottom already. But, I'm not feeling that this summer is going to... Unless there's an attack on Iran. If that happens at a left field someplace, everything's going to change. But even without that, this policy that Japan is embarking upon is going to unravel. And that is why people are buying physical gold and silver. So, just want to offer the explanation as to why people ran out of commodities. It wasn't just because of a slowdown in China. They've been having a slowdown for a while, and it's not like a major slowdown. There's still way over 7% growth. They even talked, why all of a sudden? It was because the Bank of Japan embarked upon this policy. They made easy money available to investors at basically no interest, practically no interest. And Japan can't raise the interest rates because that would take up their entire government budget paying interest. It's already at 30% of their budget that they're paying off just plain interest. So they made more money available, and what's going to happen is, everybody said, that's a paper trader says, let's get yen at 0 and invest it somewhere else with some kind of rate of return. We'll take that same money, get it invested someplace else at a real rate of return, leverage it up, and we're sitting pretty. But actually, I think when things fall apart, it's going to be like, there's going to be a lot of people who are going to be caught in a trap, even the financial people. And I say to that, so what? So what? If you got physical gold and silver, you're cool. It's going to unravel a little faster than people think, but it ain't going to be like in days, But it ain't going to be like gold's a good freaking investment for the next 10 years. I'm not buying that line that Jim Rogers keeps saying. I ain't buying that line. I think the peak for the commodities is going to be around 2017. But we're also going to see another peak around 2014. And things are going to heat up during this year. And if there's a war in the Middle East, and I know nobody says, oh, it shouldn't be there. You never know. It's always like when they think it's not going to happen is when it happens. I mean, who the hell expected a strike on Syria from Israel? I don't know. I mean, if somebody could do it. If that happens, gold, oil, and silver are going to start taking off a lot faster than you think. So, I mean, you don't want to count on that to happen, but it may happen. But either way, stuff should unravel where your silver is your safety. It should unravel in this term of the Obama administration. It's actually going to happen during this time. And silver and gold aren't going to be a permanent bet for 10 years. So it's coming up soon enough. That's all I got to say about that. And I think that is a valid reason as to why the commodities really took a hit. It's because of the Bank of Japan's QE policy. You believe it, but it's going to have an opposite effect eventually. Right now, it's caused them to run out of paper gold and paper commodities because they take the yen and they reinvest it in things that give them yields. For long range, it's going to cause way high inflation. And long range being I'd say way less than 2 years for sure. For sure. So that's not a really long range time frame. So just hang on.